Hi, good afternoon and welcome to our webinar on making tax digital for income tax. We're just waiting as a few more people are joining just now and then we'll get started. So the point of our webinar today is to help you all get ready for making tax digital. All of you that we've invited on today are here because we've identified you as being part of MTD from April next year. What we'll do is we're going to start, I'm going to hand over in a minute to my colleague Edward from the tax department, and he's going to give you a run through of just a reminder of what MTD is and how it's going to work and why this is being brought in. And then he'll hand over to Andy from our accounting and business solutions team. We'll take you through some of the specific software, and then we'll finish up with a question and answer all of your questions. And hopefully when we get to the end today, you will have an idea of what you need to do, how we can help you, and how to get signed up and ready. You'll notice at the top there's both a Q&A box and a chat box. Either one, probably ideally the Q&A box, if you pop all your questions in there as we go along, and I'll make sure we get them all answered at the end. So I'll hand over to Edward now.
Good afternoon, everyone. Thank you, Lucy. So as Lucy mentioned, I'm going to start with a quick recap of what MTD is and how this is going to affect you. So in a nutshell, instead of filing one annual tax return, you'll now need to submit updates every quarter, so 4 times a year. All your records must be kept digitally using HMRC approved software, so paper records or basic spreadsheets alone will no longer be enough. There is still a year-end stage, which is now called a final declaration, and this is due by the 31st of January after the tax year. And this replaces the traditional self-assessment tax return that you will be used to. The main difference from the annual tax return is that it combines the quarterly updates that you previously submitted, and it includes any adjustments that haven't already been reported. If you're VAT registered, you might already be familiar with some of this, as MTD for VAT has been in place for a while. For income tax, the principles are similar, and it's about moving from annual reporting to more regular digital updates. So when will this affect you? From April 2026, MTD will apply to self-employed individuals and landlords with annual income above £50,000. By April 2027, this threshold is lowered and it extends to those with property and self-employment income between £30,000 and £50,000. And finally, by April 2028, it will include those with business and property income over £20,000. So it's important to remember that this is based on your income or your turnover and not profit. If in scenarios where you have both self-employment and property income, you need to report each separately. And if your combined self-employment and property income is over £50,000, you'll need to report even if individually you're under the threshold for each. So that will mean up to 8 submissions a year and then a final declaration. So as I said, once you're in MTD, you'll be required to submit 4 quarterly updates. So the first of these will be on the 7th of August 2026, and that covers the first quarter, April to June. And then you'll have to submit on the 7th of November, covering the second quarter, then the 7th of February, and finally the 7th of May, covering the final period. So it's important to remember that with these updates, each is cumulative, so it covers the year to date and not just that particular quarter. You can elect to align your reporting with the calendar quarters if that suits you better. So that's what we're showing on screen now. Otherwise, your first quarter would be the 6th of April to the 5th of July, etc. and then your final declaration aligns with the tax return system, which is due by the 31st of January. So what's included in these submissions? So all that needs to be reported to HMRC in the quarterly submissions is a simple income and expenditure for the period. You're not required to make adjustments for depreciation, capital allowances, or accruals. And there are presently no penalties for incorrect submissions. However, you should try to make this as accurate as possible. At this stage, the quarterly submissions have no impact on your tax payments. These payments are calculated as usual through the final declaration for your payments on account, etc. And if you miss a deadline, what happens? Well, HMRC have introduced a new penalty regime, and this is a points-based system. So each late return, you accrue 1 point. And if you get 4 of these, there is a £200 penalty. If you go 12 months without any new points, then your points are reset to 0. But it is very important to remember that you can get a penalty of up to £3,000 if you do not keep suitable digital records. And just to summarize before I hand over to Andy, with making tax digital, what you need to do, first of all, you need to start keeping digital records. Then you will be required to submit these quarterly updates 4 times a year. You'll have to finalize your figures at the end of the year and then submit a final declaration by the 31st of January. So I'll hand over to Andy, who's going to take you through some of the software that's available to help.
Thanks, Ed. So as Ed's alluded to, HMRC are going to need you to keep digital records and to submit your quarterly returns digitally. There are a number of different softwares out in the market, some of which come at no cost and some of which have a cost attached. Many of you may already be keeping records electronically, such as on a spreadsheet. However, you need to have a means of submitting this information through HMRC approved software. HMRC do actually have a section on their site that allows you to specify your requirements and help you choose the software that you might want to use. But this list of software is actually quite daunting. As a firm, we're looking to recommend that you use a cloud accounting package. These packages are geared not only to allow you to be compliant with MTD requirements, but can also help you manage your finances. And our preferred solution is Xero. So what are the advantages of using Xero? Well, these are that you've got the ability to capture data for expenses through integrated tools. You have automatic bank feeds of transactions going through your bank account in relation to the business. There's automation of coding the relevant categories. And there's provision of real-time information for the management of the business. And this can lead to better tax planning, as you'll have a better feel as to how your business is performing throughout the year, rather than just finding out when you start preparing your information to hand to us to submit your tax return. And Xero has a number of different packages available, but they've introduced a new plan called Simple, which is at a cost of £7 per month. And this is designed to be used by non-VAT registered businesses and will be fully MTD compliant. One of the other advantages of using Xero is, of course, that at Henderson Logie we have a large team of staff that are using Xero on a day-to-day basis. So we're fully up to speed with how it all works and how we can help you implement it. For those of you who are just landlords, the solution may depend on whether you're managing the properties yourself or whether you have a property management company helping you. And if you have a property management company, it's probably worth having a discussion with them to see what reporting they are providing and what format this will take to help you comply with the requirements. And if you are managing the properties yourself, then there are products such as Hammock that will assist with the management of the properties as well as providing MTD compliant reporting. So how can Henderson Logie help? Ultimately, the amount of help we give will be bespoke to your needs. You may already be comfortable with keeping your records digitally, so you may only want assistance with assuring that the software is set up to ensure that we can make the necessary submissions. And if, for example, you want to continue to use spreadsheets, then we can provide templates that can set out the format and categories required for the submissions. Or if you're not comfortable with digital records, we can assist with keeping these records for you. Or it can be anywhere in between. We will discuss your requirements and tailor our service accordingly to what you want. The key to any system is that we can link your quarterly submissions to our tax return software for completion of the final 5th tax return. So on that, I think I'll pass over to Lucy.
Sorry, thank you very much, Andy and Ted there. So that's given you just a bit of a flavour, hopefully a reminder of what the Making Tax Digital is. So what are the next steps? Well, the first thing is to choose the way in which you want to keep your records. As Andy said, we've got a lot of experienced people with Xero. We've looked a lot at Hammock. I think that's a great solution for some landlords. And for others, if you want to keep it on Excel, then we can give you the template that would be compatible with our software for then submitting that through to HMRC. So have a look back through the slides. We will be sending you all of this afterwards. Have a look into them, come and chat to us and decide on what would be the best solution for you. The next choice is then to choose how much help you would like us to provide. As Andy went through on that last slide, there's sort of 3 options there, whether it's that you're going to do pretty much all of it yourself, either through one of the software providers, and really all you're looking for us to do is help you submit it each quarter and then do that end of year, the same as we do the tax return for you just now. Or whether you want something a bit more in between, where you want to do most of it yourself and we'll do the rest. Or for those that just find this completely daunting and want us to do pretty much all of it. So have a think about that software, how much help you'd like, and then we would encourage you to come and speak to whoever your usual contact is at Henderson Logie, whether that's one of the 3 of us on the webinar today or one of our colleagues. Come and speak to us and chat through those 2 options that you've been having a think about. And from there, what we'll be able to do is help you get set up with that option and also discuss a quote for you as to how much that will cost. Once all of that's done and agreed, then it's getting set up. So signed up with HMRC and registered for MTD. And also if you are going for a software like Xero or Hammock, getting signed up for them as well. And once you've done all of that, you're ready. So what I would say, though, is this starts from April 2026. I would really encourage everyone not to leave it until March 2026 to get signed up. So start now, start having the conversations, come and chat to us. There's no reason we can't get set up and get you registered next week if you really wanted to. So we would encourage you to get on with that as early as possible. So all that's left now is to start answering all of your questions. So just as a reminder, or for anyone who joined a little bit later, we've got a question and answer box at the top there. If you just click on that, you can type all of your questions in and we will answer them all, or as many as we can in the time we've got left. So to jump into our first question. So does the tax year stay the same April to April? So the answer to that is yes. Essentially, the tax year is staying the same, but I don't know whether you've got it there, Ed, and you could just quickly pop up the slide with the dates on. So you can elect to have your quarters actually tie in with the end of the month. So your first quarter would be, in theory, 1st of April to the 30th of June, or 5th of April to the 5th of July. So it'll be up to you. We're encouraging most clients, just because it's easier, to align with the month end and make that election. But you can choose either one. But yeah, essentially it will run from April to April each year.
I would say,
and also,
sorry, I would just add that if you do go down the cloud accounting route, it's probably easier if you go with calendar quarters. It makes the reporting easier.
And there was a second part to that question, which is, do you record per the invoice date?
Yeah, so it's
Sorry,
Lucy. For the quarterly updates, it's done on the cash basis. So yes, it will be on the date that the funds were received.
So the next question we've got is, can I continue to provide my spreadsheet information to Henderson Logie to be submitted to HMRC on our behalf? Absolutely. What we would do is send you out a copy of the template that essentially has everything in the right place ready, and it's capturing all of the right information for HMRC to be transferred straight through. Obviously, if you can keep it in the format per the template, it's a bit less work for us, which obviously keeps costs down. But if you're struggling with that template and want to keep it the way you are at the moment, then we can absolutely do the rest of that to get it into the template format. And yes, we will absolutely follow up with you guys to discuss that. The next question we've got is, if we start earlier, will our record be used for 2025?
Sorry, I'll answer that one, Lucy. If I understand the question, you're automatically qualify for making tax digital based on the figures that you submitted in your 2024 tax return. And this will also include the 2025 tax return, but obviously the submissions haven't been finalized yet. So in terms of the question, you're already automatically enrolled in making tax digital. There are some exemptions that are available. For example, if in 2024 you had a ton of property income and that was all sold in 2025, you could apply for an exemption to be taken out of the making tax digital net, but you do have to apply for that exemption. So if anyone on the call thinks they will fall under that category, then please let us know and we can help you with removing yourself from that. But if your question is, will your records for 2025 be used, as in we would report that, we would only start the reporting from 2026 tax year.
Yeah, so it would basically be all transactions from
April 2026.
April onwards. Yeah. Right, here's one for Andy. If you have income separately as a sole trader and property income, which single accounting software would be best?
Well, Xero, our recommended software, is capable of reporting each separately. You can record your transactions as to whether it's from your sole trader business, and you can separate out your property income and generate reports to allow both submissions to be made. So you don't need to be looking at separate subscriptions or separate bits of software. Xero or would enable you to do that.
One of the questions we had the other day, Andy, which might be worth just responding to again here, would you ever recommend more than one software in a situation like that?
I would say Probably not. Just because you could end up with a double cost, effectively, because you would be paying for two separate subscriptions. If you were to be using sort of different bank accounts for your different trades, then you can have multiple bank feeds coming in. I think one of the questions or that we had the other day as well was if you had effectively you had, say, your property income coming into your personal bank account and it wasn't anything to do with the business, could you put the records in manually and without having a bank feed? And the answer to that is yes. You can quite easily put the transactions in manually. So you may well have, say, a business account for your sole trader business, which has got a bank feed and operating effectively for you for managing that bit of the business. But then you could manually input your property transactions into the same software to be able to generate both reports to enable you to file the two submissions that you need to do.
Right. And the next question, where you've got a property abroad, what happens if the tax year abroad is not aligned with the one in the UK? So I think for that, it's no different than it is now when you're reporting on your UK tax return. For the UK, you need to report the UK tax year. So you would report the foreign property income under the landlord's MTD submission in line with those, either the calendar quarters or the tax year quarters. The next question is probably one for Ed. Are pension, interest payments and dividends all included in MTD?
No. So you only have to report each stream. So if you're self-employed, you just need to report that element of it. And then if you have a property, you would just need to report that element of it. All the other pension payments, dividends, all of that would come in the final submission, similar to your annual tax return now, but they don't need to be reported quarterly. So that you can essentially forget about those until the final tax return.
And one for Andy. How does MTD deal with capital allowances if I'm buying things partway through the year? And do I need to report accruals and prepayments and deal with depreciation on each quarter?
The answer to that is no, you don't. But I think if you decided to do that for good management purposes and good, to get good management information, see how the business is doing, you can do it through the software and record it, but it doesn't necessarily need to be included in your quarterly returns.
I think one of the key things for the first year that will be important to remember is that, as Ed mentioned there will be penalties for late submission of any of your quarterly returns, but there's no penalty at the moment for any of the figures not being completely accurate. HMRC are really just trying to get people to get into the habit of reporting everything quarterly. Obviously, you want the figures to be as accurate as possible. That's going to help with tax forecasting, business planning. Generally speaking, it's on the cash basis. If you've received something or you've paid something, it will go in. But if you do want to try and do some of those things as you go along, you absolutely can, and you don't need to worry too much about it because everything will get adjusted in that final quarter and that end of year submission. So the next question, which I think we've probably alluded to the answer a bit, is how will our pricing compare to now? And will we have a yearly package or would we pay quarterly? And the answer to that, I think Andy alluded to, as did I, it will absolutely depend for each of you on what software you pick, how much help you want from us. Obviously, there will be an increased price for most of you if we're doing the quarterly reporting for you. But we will, as soon as you come off this webinar, start having a think about the software and how much help you'd like, and then we'll discuss those and get a quote with you. And then we can discuss whether it would be better that is yearly, like your annual accounts and your tax return, or whether it might actually be better to set it up such that it could be paid monthly or quarterly. So all of those things are up for discussion, and we will find basically a bespoke package that suits each of you. Right, are there any more questions? Hopefully we've answered most of the questions. We've certainly answered all of the ones that have been popped into the Q&A box for now.
I think there's a few more that just came in.
There's
Lucy.
a few more that just came in. If you invoice in US dollars, do you have to report in pounds?
I'll take this.
Yep.
Yeah. Yes, you would, and I would suggest you probably just use the exchange rate at either the day of the transaction, or if there's lots of transactions, you can use a HMRC average exchange rate for that period, and then it will all get adjusted in the final submission anyway. And as Lucy said earlier, there's no penalties for inaccurate reporting, so it won't make a huge difference until you get to the final assessment. But yes, just for accuracy, I would just use an average exchange rate to pop in those USD transactions.
And probably one for Andy here. Can you say more about expenditure figures? Can these also be set up with the bank feeding in the figures to the accounting software?
Yeah, absolutely. So effectively, what the bank feed does is it connects with your bank account, assuming you've got an internet banking facility. Connects with the banking software and updates on a daily basis. So effectively, you can see every transaction that's going through your bank, which you would then categorize to the relevant expenditure category. So that happens effectively on a daily basis. You don't have to go in and reconcile it on a daily basis, but it populates on a daily basis. So hopefully that answers that question. The other thing, just in terms of record keeping and stuff, is that with the cloud accounting packages that you can get, is that the actual source document can be attached to the software. So if you've got your your electricity bill for that property, you can attach that electricity bill to the transaction in Xero, and therefore it's then filed, and HMRC will accept that as being a valid source document, and so that you don't need to keep if you did have a paper copy, you don't need to keep the paper copy if it's attached to the transaction and uploaded into the accounting software.
And the next one, if our SIP is a landlord, will this mean the SIP has to submit records, or will it be our responsibility? So at the moment, this applies just to individuals. So obviously the legislation is still coming out and ever changing. But certainly from everything we've looked at so far, partnerships are not caught by this yet. They will be in the future, and our our belief is that no SIPs would not have a reporting requirement at this stage. Again, likely to be something that will come in the future, and as that bit of the legislation comes out, we can let you know, but certainly not from April 2026. So just individual. Are there any more questions? I'll just refresh the feed again to see if there's any more.
Sorry, Lucy, I don't think we've mentioned about jointly owned properties on this one.
That's true. If you've got a jointly owned property that turns over, say, 60,000 each year, but it's owned jointly half and half, that would be 30,000 for each of you. You wouldn't be caught unless you had other property income or self-employment income. You would be caught from April 2027, but you wouldn't be caught this year. It's if you personally, between your sole trade turnover and your sole trade property income, are over 50,000. Well, we wait to see if there's any last questions that come in. Are there any final comments from either you, Ed, or you, Andy?
Oh, from me, no. I think we've covered everything.
Yeah, I think we've covered most things. I think it's just important to bear in mind that this is the sort of the direction of travel, and keeping good digital records in any case will be a positive. So it's good to get a head start on it, I think.
Yeah. And I think the final point for me is that at HL, we're already geared up to help you. So just reach out when you're ready. Let's start having those conversations about what software you're going to reuse, how much help, and we'll get those quotes over to you. As I said, we would rather not do all of them in the last week of March because it might get a little busy. So let's start now and start getting you ready well in advance of that. So that just leaves me to say thank you very much to Ed and Andy, and to all of you for joining us. Thank you very much.
Thank you.
Thank you.